and I get all these picks. By about this time of the week, I've been busy and I'm running dry on ammo, and I love not only this program, but when it occurs on Wednesday, to give me ideas for the next couple of days before I can regroup on the weekend. If you never watched Trade Masters before, it is brought to you by tackletrading.com. Go sign up for a free 15-day trial to see what the good folks at Tackle Trading are all about. Go to the store tab and sign up for that trial. And if you've never seen this show before, two coaches come, 5 picks each. They can be long-term investments. They can be short-term trade ideas. They can be cash flow ideas. They can be whatever. And at the end, we declare a winner for fun, and for bragging rights. And we are joined tonight by last week's champ, who's won it several times, Mr. Greg Holmes from Canada. How are you doing tonight, Greg?
I'm doing good. Thank you very much for having me back. I appreciate it.
You have at least one bar joke for me tonight.
I do. Okay. I do. At least one.
He's already won. Greg is now the winner. All right. And we're joined by Marquis, the second time on Trade Masters, straight from the gym, from what I was hearing,
That is correct.
So you got that adrenaline flowing.
I do. So I'm awake. I'm ready to go.
You're ready for battle?
Yeah.
All right. Let's get right at it. Greg, as defending champ, who would you like to see go first?
Oh, I'll defer to my worthy opponent there, Marquis. Step up to the plate.
I appreciate it, man. I actually, hey, I was looking forward to it. I was prepared for it. So, Mark, are we starting off with the joke first?
No, joke after the pick.
Okay. Let's just start off with one of my favorite sectors right now, and I think most people could agree. And that's starting off with financials. So for me, I like the sector just itself. So let's look at XLF. For me, I'm personally looking forward to this breakout out of this sector. I mean, for me personally, this has been the one I have been looking at or been trading within just individual components within this sector over the last few weeks. And right now, the way I look at it is, especially when there's so many I want to look at, I just ask myself, okay, can I just play the full sector? Instead of just being confused about which one do I want to pick, and I like the price of it, and just where we are right now in market conditions, and again, where I feel comfortable with the price, I feel very comfortable getting aggressive, going with call options with XLF. So if you want to pull down the option chain, I mean, if you look at the price of, say, we're going June, going down 72 days out. I mean, look at the price of closest to 60 delta, 62. We're looking at between 163 and 186. I mean, that's as cheap as it gets. So for me, I feel comfortable going deep. And honestly, the way market conditions are right now, especially if you're someone who hasn't been very as confident going with call options, because I know when I first started trading, that was something I did not do a lot of. But I think in these conditions and at the price, these are times to start getting more comfortable making these type of decisions. So this is my first one for tonight.
Now, and there are a couple of things I like about this. One, there's several things I like about this. One, I like when a hot sector takes a month off and then forms a clear breakout level. I love your choice of call options here. They're incredibly cheap. I mean, if I wanted to even reduce risk further, I could just go to that strike price that is just 16 cents out of the money.
Yeah.
I can pay $1 on a stock in a hot sector that's ready to break. That's really, really, really cheap risk.
Yeah, that's why I feel like this is the perfect time to really start getting aggressive with these type of prices. So this is something that, I'm not really thinking twice about, as I'm, placing the trades. Now, obviously risk is involved. I know what my stop losses are, but this is something I feel comfortable making this decision without thinking twice about it.
And before you even call it up, Greg had already done all the work for you, drawing lines on the chart, higher high, the higher lows that I was seeing on the chart.
Yeah.
So, Greg had already scattered out. Greg's running the screen for us. And when the market, listen, we've had high volatility for a long time.
Yeah.
That's shifted. I mean, the volatility down 20% on XLF. Held up also during rates. The rates have not been going up on the 10-year. You get a rate spike. I mean, cheap risk, 70 days out. The only question I have is, what's your trigger? And do you wait for, above this little? I mean, we're right there on resistance right now.
I like it right above those highs, 35.30. I like it right above there, honestly. This is not something I need a whole bunch of confirmation for. So I'm triggering right above that for me.
Yeah, no, I like the cheap risk. I like this trade setup. I like it a lot. I doubt I like your joke, but I love your first bet.
Before you go into the joke, I want to add a little bit to this because I think this is fantastic. But I like it for a whole nother reason. I like it for all the reason Marquise went through there. But what I like for the other reason is the financial sector. The big players in the financial sector have earnings coming real soon, and
Yes,
I mean real soon.
That's
We don't have to worry about any of that with the ETFs, and that's why I love the ETFs. You can get in here. You don't have to worry about that stuff. The volatility is going to do what the volatility does. That's really not going to affect your trade that much as well. It's just running these ETFs in that manner. I think it's just fantastic, especially when we are so close, because all the big banks, they all fire off earnings at the same time, and then there's kind of a trickle effect after that. So if you're a little bit worried about that, maybe you haven't never traded through earnings before, maybe you don't have that skill set. Well, look at that. You've just eliminated all those issues here. Plus, you can get a real nice, low dollar call option to keep well below your pain threshold. So that's fantastic.
Without doubt.
So just had to add that in there.
Yeah, no, I like that trade setup quite a bit. All right, let's hear your joke, sir.
All right, you ready? Okay.
I am.
It's pretty simple. So, have y'all ever wondered why skeletons are so calm?
Now, you can say that again.
Have y'all ever wondered why skeletons are so calm?
I have never wondered why skeletons are so calm. Why?
Because nothing gets under the skin.
Oh, not too bad. Not too bad. All right, Greg, you're up. Round one. Let's go, sir.
All right. Well, you know what? It's finally happened. Our old friend Apple is back in the mix.
I was looking at this, Greg. I was looking at this.
Bringing up Apple.
I'm already in this trip, so I'll say that. I'm already in.
This is the first time Apple has been brought up on Trade Masters.
Wow, really?
And we've been doing Trade Masters, 4 or 5 months now. We haven't had a lot of quality. I mean, we've been in this long-term consolidation, not a lot of setups. This is the first time it's been brought up.
Yeah, that makes sense.
Yeah, so, well, there really hasn't been much to talk about, right? Like, so, if you start looking at this thing from a long-term perspective, right? This thing's just a juggernaut of bullishness, right? So it's not like you're going to try and trade this, counter trend trade this unless you're really skilled at doing so. Like you said, that to me is kind of a fool's errand to try and counter trend trade this. What you do is you wait for the right setup, and I think that's what we're seeing today. We've got the moving average crossovers here. We got the 10 crossing over the 20, and we got that golden cross, as they call it. We've just broken above that 50 MA. Okay, so we've gotten above that. We've already made the reversal here, right? So we've already broken this trend line to the upside. So we're working there. Now we do have earnings coming, but it's not for a while yet. End of April, so there's still time to play this one out. Like you said, it's finally, we start looking at, this being, I think, this one's in the tech sector, isn't it? It's in the S&P in the tech sector, I think, isn't it? It's a big portion of those, if I remember correctly. So, tech's kind of starting to show us a little bit of life as well, right? We're starting to get a move back there. It's actually already done the breakout that we've been waiting for on Apple, and it's a big component of that. So I just like this trade. It's very basic. You do have earnings coming up. So for me, this is just a very simple bull call spread. I'm trying to take advantage of direction here. Now, there's a million ways you can play this. This is just the one I chose here. Again, it's just, earnings is coming up. So you're not going to be in this trade, most likely the whole time. You've got to pick your spots, and I'll pull up the risk graph and show you what I mean. So I want to buy the 125. So that's a 62 delta there. Okay. And then I want to sell the 145. Okay. So you're looking at about 580 here, 580-ish, and we'll get the risk graph up here. All right, so you're putting out 580. That might be a little rich for some people's blood. If that's above your pain threshold, that is not a problem. What you need to be doing with trades like this anyway, which is what I do typically, is I will pick a spot where if it gets below there, it's telling me that I'm wrong. And when it does that, I get out of the trade. Okay, so that's the way to control this risk even further than we've already controlled it. Okay, so I must have two of these in here. As you guys can see, I've built two. 1160 was just way too much risk there. So 580 for risk, and reward is 1420. So you're 2.5 to 1 there. Nice risk reward. Again, if this thing hits our target, which it very easily could. So the ATR on this is about $3. Okay, so we've got, what do we got? 28, we got what, 21 days left. So we got about 3 weeks to reach our target. If it reaches your target in those 3 weeks, okay, you're not going to get all of this. You're not going to get all this time to get with it, but you got to take advantage of the direction. So if you hit a certain percentage, 50, 60, 70% of your expected, profit, nothing wrong with closing this trade. Definitely get out of it before earnings. And the other part of this is, as we're heading into earnings, our volatility is most likely to increase. It typically does. And so that's going to make this, because it's a debit trade, it's going to inflate that that premium that's inside there. So that can help as well. So you got volatility working for you. You got direction working for you. You've got a nice technical setup, and you got one of the biggest traded stocks on the planet. So liquidity is not an option, or not a obstacle either. I just love the setup here. Simple, nothing too crazy.
I agree with that a lot, Greg. And I think the point that you mentioned, and this is part of the things, I mean, I like when earnings, I'm not a fan as much when earnings come around, because I feel like they can get in the way a lot of trade setups. But what I think one of the best things about earnings season is you have the increased volatility.
Yeah.
And it helps out a lot with those directional plays, like the debit spread. Like, for instance, right now I have a bull call option on Apple myself. And then two, even, if you don't want to go with the debit spread, you get nice credit options if you want to go, let's say, a bull put spread. So it's like you kind of, pick your ports with, if you want to be more aggressive or conservative. So that's why I think it has its pros and cons when the earnings season comes around.
Yeah, for sure.
In all honesty, these first two picks are exactly why I like Trade Masters from an own personal selfish standpoint. Because you do get busy during the trading week, and you're focused on your positions, this and that. Two great setups. Great way to start off Trade Masters tonight. A+ setups on both of them. How's your joke, Greg? Is it A+ or is it like C-?
I like this one. I don't know. If you guys don't find this funny, I think I'm at a loss after this one. So a little bit of build up here for you. Last night, my girlfriend dressed up as a policewoman and told me I was under arrest on suspicion of being good in bed. 2 minutes later, she told me all the charges were dropped due to lack of evidence.
Okay, that's a
little self-deprecating. Greg likes the self-deprecating joke. He does. He's had a few of those. I appreciate that. All right. Great round one. Marquise, start us off with round two.
Okay, let's pull up ABC.
ABC?
ABC.
All right.
Pharmaceutical distribution.
Yeah, so this is in the healthcare sector right now. Like the setup. Personally, for me, I like this above. My trigger is above 117.40. I like the way it's holding its own right above that 20-day moving average right now and that 9 EMA. And for me personally, once again, this is something where if you pull up just because I like the strength of the way this chart has been, let's say over the last few months or so, this gives me more confidence to want to be more directional. So sometimes when I'm trying to figure out, okay, do I want to be more directional, or do I want to be more conservative and go to credit spread route? It always lets me, the first thing I look at is two things. One, I like to look at the weekly chart, and I like to see how consistent or how strong is it from a daily perspective. So when I look at those two factors, I feel more comfortable being more directional in this situation here. And then when I was looking at this earlier from a trade perspective, now this is a little bit more aggressive. If you're going to the option chain, and let's say you're going May 21st out. If you're going, I believe I had this actually, I went the more conservative route. Not to say I'm not comfortable going the May 21st route, but that just not maybe everyone's cup of sugar. So for me, if I'm going to August and I'm going down to 135 chain link, I had 120 and 130 bull call spread. And can you pull up what the what that ratio was, Greg?
Sorry, the ratio for.
No, I'm for the 120, 130 bull call.
Okay.
Yeah.
120, 130.
Yeah, so this is what I had, and actually for the price of the stock and then what you're paying for this bull call spread, this is something I feel more comfortable with going if I want to be a little bit more conservative going out.
All right, what do you think, Greg?
Yeah, I do like the trade. My only reservation with this is, and again, it's nitpicking, and you can massage the strikes and whatnot to make this to work. I prefer to go to where I have a 2-to-1 risk reward. We're not quite there on this one, but the way to do that, the way to make that happen, and I'm sure Marquise does this as well, is you can pick, like I said, you can pick a tap out point here, go to the chart and say, let's get a better chart up here. I could go to here and say, okay, if it gets below that 20 MA there, right? It's basically telling me I'm wrong, or it's telling me that it's going to a deeper pullback. Either way, I probably don't want to be in the trade at that point. So I can pick that spot, say 114, and go to the Analyze tab here. And if it gets to 114, worst case scenario, if that happened tomorrow, I'd lose, $49 here. Right now, obviously, as time ticks on, it would be a little bit more than that. But the point being is I've got an area where I can stop out of this trade, but yet I could still let it run if it wants to run and have the potential of a 557 reward. So there's a few different ways to do that risk reward. Like I said, for me, when I look at these things, I want to try and set them up 2-to-1. But if I can't get them 2-to-1, I think a good point to tap out is the way to go. But I like the trade personally. I have no issue with it. The ATR on this is about 2.5, so you're going to have a $6 or $7 move there. Sorry, 117. No, sorry, about $3 move. So yeah, I would prefer a little bit more, but you know what? The way this thing's been going, especially from the weekly chart, I think it can get well beyond 120 anyway as a secondary target. So yeah, no issues here for me. How about you, Mark?
What's the trick? I mean, the option liquidity was a little worrisome to me, just from
that was for me too.
We don't have the tightest spreads. We don't have the tightest spreads. So I mean, if I was choosing between two equal setups, you always side with liquidity, right? You always side with liquidity. So I mean, that's the only thing that really concerned me.
It's got lots of volume and open interest on them in the May options, right? Like it's got 1,000 on the one side and a few hundred on the other. I didn't really look at the August one here. Yeah, the August is a little thin, right? But I think as it goes further on, right, you would pick up some interest in those. So I think originally when you were kind of talking through it there, Marquise, I wouldn't have an issue because you've got earnings coming up as well.
Yeah.
Your earnings is in 5 days into May. I could see doing the shorter term one. Your theta will be a little bit more affected, but your cost will also be a little bit more affected as well. And the problem here is we're looking at this right now, and this is after hours. There is no way that this wouldn't tighten up, quite a bit, during market hours as well. So I think that's a little thing. The volume does scare me a little bit. I usually like over 1 million. I prefer over 2 million, but 750,000 is fine for a lot of traders as well too. It's just a question of, how you feel about it. So.
All right. How do I feel about your joke, Marquise?
Okay, let's give it a go. So why are ghosts so bad liars?
Why are ghosts bad liars?
Because they're so easy to see through.
You got this whole Halloween theme going. Yeah, skeletons and ghosts. I expect a witch and a warlock joke next round. All right, Greg, round 2. What you got for us?
All right, CMCSA, Comcast. All right, so Comcast here. It's one of the few, like Disc A and all that. One of the few that didn't get just absolutely crippled recently, but it also didn't have the same rise to it as well. But it's on this nice steady climb, well above holding above the 50 this whole time, just kind of working its way along. No real drama here, with the exception of maybe back in January. I just like the setup here. You've got earnings, but it's not until the end of the month there. This is just a simple run-of-the-mill stock trade for me. You know, obviously, depending on the size of your account, that will dictate how many shares you'll be able to do. But I like entering this above 55.50 and running it up to 58.50. That's about a $3 move for a stock that's got a 1.14 ATR. So your risk reward, your 2-to-1 is very simple. You've got an ascending triangle here. You're just about to break above these two moving averages here, and you wouldn't get in until you're above those two with that 55.50 entry. So, you know, once you're above that, like I said, you got that lovely support of the 50 MA, then get above those other two MAs, and I think a run to the highest is warranted here. This is in the communication sector, which is still strong. You can see here breaking out here today. You know, so you've got these opportunities here. Like I said, for me, just a nice simple stock trade. Get in, collect your $3. It would only take, you know, a few sessions to get up to that. You've got you know, better than 20 days or more to get to your destination. You know, keep moving your stop loss up as you go along. Nice, simple, easy trade. You know, no muss, no fuss.
No, I mean that's a good setup. What do you think, Marquise?
Do like it. I mean, the only thing, because I actually was looking at this early in the day, I want to see it break above those short-term moving averages. That's just me.
Greg, this is how you throw shade. I was looking at it the other day, but I didn't pick it. That is a polite way to throw shade.
I mean, look, that red candle right above those short-term moving averages, I respect stuff like that, you know. So that's the only thing that really kind of gives me cause to pause. But other than that, I love the analysis and everything else outside of that, especially when you see how far away earnings is and also the price of the stock. Yeah, I mean, this is a good prospect if you're looking at that from that perspective, from a stock play.
I mean,
now I got to deflect some of that shade. The reason I had the trigger at 55.50, which is considerably higher than we are, is exactly the reason Marquis said there. I need to be above that noise, right? You can see that there was some resistance there. If you get in at 52 or 55.50 and beyond, then all that noise is gone, right? You're breaking above that. So that's kind of why I picked it. But you know,
there's something else I like about this stock from maybe even a longer position trade standpoint. You know, back in January, survived the GameStop stuff really well. Not a whole lot of volatility. Back when the 10-year yield was causing crazy, you can barely even see where that impacted on the chart. And then Archegos, this is in the area of the market that was getting pounded. And yeah, it had a little bit of a red candle, right? But nothing major, right? This stock has withstood volatility this year in the main events. GameStop, 10-year, Archegos, and especially, I mean, that storyline tells me there's a lot of I like a nice boring stock every once in a while. So.
Yeah, there's nothing wrong with that. You know, the older I get, the more I found myself saying the same thing, Mark.
Yeah, so like, you know, I like the backstory of price movement this year on Comcast a lot. Do I like your joke a lot, Greg?
All right, you'll tell me. All right, a dyslexic man walks into a bra.
I like the setup better.
Okay. Yeah, that's fine. They can't all be winners, just like my case.
Round 3. Let's do this.
3. Okay, so I'm actually going back into the financial sector. Okay, now this one's a little bit, you know, this is not something I would normally pick on a regular, but again, because I like the sector and I like the way it has the potential to break out soon. When you look at Blackstone, look at BX. I like the way that it's been hovering, kind of hanging out for a while, kind of just stewing around really right above that 90 MA from a daily perspective, right? And then you're less than 1 ATR away from breaking out of all-time highs. And then, of course, for me, I always like looking at price. And then I love the liquidity that you have when you go down to the option link here. You can play this a variety of ways. For me, if you go 72 days out, okay, more expensive, obviously, than when we're looking at XLF earlier, but still look at what the cost is to buy a call option. Just 51 at a 51 delta. I mean, that's, to me, that's for a call option for a stock at this price. I love that. And for me, now for some people, I don't mind waiting one more ATR to see this breakout of these all-time highs for confirmation. Now, I think it would be a little bit more aggressive if you want to go above the highs or 10% of the ATR above these highs here. For me, I want a little bit more confirmation if I'm going to be that aggressive. But Blackstone is definitely one that I was trying to decide if I was going to go with the sector. But if you want to go from an individual component, this is the one I would choose.
And I mean, one thing that is standing out is the cheapness of call options. I mean, it is the cheapness of call options right now is very tempting, right?
Mm-hmm.
I mean, I look at something like that as, you know, $77 stock potentially ready to break out. I go that far out. That's a cheap call option. That's standing out. I mean, I like these kind of insights. This is one of the reasons I love the show. What do you think, Greg?
Yeah, you can't beat the analysis. You got an ascending triangle, breakout level right above 76 there. Earnings is coming, but you've got a few days before that happens. That would be the only thing that I'd worry about. You're about 14, 15 days out there. So you do have to be careful with that. But other than that, yeah, that call option, you've got a lot of time built into it for a $300 risk. If you just left it alone. If you didn't, if you were just willing to take the full risk, for the 72 days, that's fine. Or, when you set these things up, you could pick a tap out point if it fails. Maybe you get a fake out or something, it gets below those moving averages, you get out and you save yourself some dough and move on to the next trade, right? So yeah, the setup, you can't argue with the analysis or the setup. Like it, buying those call options, again, we talked about this before, this implied volatility, we're expecting that to rise into earnings, right? So that's going to assist these kinds of trades. This is where, when you get closer to earnings, these debit spreads and these long calls, those kinds of things, they're going to help out a little bit because of that boost of Vega there. So yeah, again, can't argue with this trade. Good trade setup. I like it. One thing I would note here though, and I'd have to look into it a little bit further. But just the way this thing moves, it kind of moves slowly. Right. I think actually, what would be decent if you were okay trading it through earnings, which if you're new, I would not recommend that. But if you're okay trading it through earnings, I think a diagonal or a poor boy cover call on this thing might be fantastic, especially with the breakout. This thing just moves very slow, very methodical, not too much drama here. Even when we got a little bit of news stuff that Mark was talking about going on, it just kind of keeps meandering up. It looks pretty decent from that perspective. You could even wait till after earnings to see about entering that type of trade too. So yeah, definitely good setup there for sure.
Well, it's funny, Greg, you say that. Is the first when Marquis pulled up XLF at the start, and I was like, poor boy covered call when I saw those volatility. In fact, I went out to November, and the 35 strike prices on XLF were only $200. Oh, wow. And so go out, clear out to November. And, when I can get low volatility, cheap option price, I mean, poor boy cover call just screams that, in those situations. So no, Marquise, thank you for these financial thing. And I don't have as much exposure to the financial sector as I should right now. So, what do you got for us, joke-wise? I want my witch and warlock joke.
All right. Now, I'm actually going, Matt always tell you, I'm a fan of sweets, so I kind of figured I'd go with this route. So why did the M&M go to school?
Why did the M&M go to school?
Because he wanted to be a smarty.
But there is the Halloween theme still. Ghost,
yeah, that's true. Yeah.
Skeleton, and then candy in the bag,
We gotta bring this back to October.
And then we got beer over here with Greg. So
yeah.
All right,
Greg.
We
don't do candy here. We do beer.
What do you got for us?
All right. Well, we're gonna go to the big boys here. A little Costco action here.
Love that store.
Yeah. All right. Weekly chart here. Juggernaut. No question about it. Pretty deep retracement. Broke that 50 on the weekly, which could be kind of scary. Didn't stay there long. Started this reversal, We're right now at this double top. We're trending sideways. We've had 3 days of sideways action here. We got a nice little breakout opportunity here. We're above all the moving averages. So all the shorter terms have crossed over the longer term. That's your golden cross there for that. So you've got some bullish signs here. It had a quick run down. It had pretty much the same extended run up there, and now it's trending sideways, which is fantastic. What it's doing is it's building up energy. It's getting all these moving averages in line, ready for, as far as I'm concerned, another run here. So this being a big boy stock, you've got to pick the option route. I don't think there's too many people buying this stock at $358 a share. It's very liquid, so there's really no issue with the liquidity here. So I'm looking at short term because there is earnings coming up. Earnings is past. So we don't even have to worry about that. So I looked at the May. I believe it's the May. Let me run this up. I put the trade tab in there. So 360 by 380, which is the target. It's the way I typically do this. So 595 debit. Analyze this trade. So you're putting out, as you can see, I've already done this trade. Let's get rid of that one. And so you're into it for 600, and your potential here is 1400. So you're well more than 2 to 1. If you look at the chart here, not the probability analysis. If you look at the chart here, it can easily get to 280. Easily get to 280. Really, sorry, I apologize. Thank you. 380. There's really nothing to slow it down here, as far as I'm concerned. That first resistance level is going to be that 380. If you get that break, you're probably going to 390 there. So you've got a real good opportunity here for a run. It's showing a lot of strength. Like I said, if it consolidated for another couple of days here, that would be even better, right? Build up a little bit more of that energy, but that break above 3. So I'd be looking to get in above the high of this candle, maybe right here, 362-ish, right? Put that trade on when it breaks that and just let it go. And like I said, you can always pick a stop loss. I would pick it down below this the support level down here. So around the 350 mark, if you wanted to get out of it, if it goes against you, risk profile, if it goes against you, you could lose a few $100 to make a potential 1400. So just another easy setup. You're not getting to earnings anytime soon, so the volatility, it's not going to pick up. You're not going to get that little boost that we've been getting with the other candidates, but with this one here, all you really need is the direction anyway. And it's a cheaper way, for $500, $600, you can play a $300 stock and you can play it effectively.
No, classic. Marquis, you got anything to add?
No, I love it. I mean, it's a nice big boy trade. This is this was another one I was looking at, and I have no shade on this one. So for me personally, this is one I definitely like. It's just that I think I had just had other prospects, and I thought this would be an obvious choice to look at. But other than that, I like the setup a lot.
Yeah, I like it. I mean, classic. Your joke's not going to be classic, but
no, it's not. All right, a jumper cable walks into a bar. The bartender says, "I'll serve you, but don't start anything."
That's so bad. That's so bad. That's like
I had to do the bar jokes,
That's so bad. That's like watching Blood Rain. It's so bad. You just you're entertained by it, So, all right. Hey, entertaining so far. Listen, if you want to be informed and entertained, but mostly informed, check out The Huddle on tackletrading.com. Listen, news is important for a trader, but you only got so much time. Matt and Tim at Tackle Trading, they break down the top 5 news stories every day in an unbiased, straightforward. You get to know what all of the big stuff going on in just a few minutes. If you want to stay informed but do not have the time to sift through hours of news articles, check out The Huddle on tackletrading.com. Free for all individuals. Marquis, round 4. Let's do this.
Okay, we're going into industrials. Let's look at MMM. All right, this was one of my favorite stocks to trade, and I really love the way it's been performing over the last few months or so. And so as I was scanning getting ready for the show today, this was one where I thought I love the setup. I love that it's just been coasting a little bit right above that 90 in May. I like a trigger above 195.65. I mean, some people may want to go above 196. And so for me, when I'm looking at this and in the price, and on top of how well it's been moving, and then also pull up XOI for a second, just the overall sector. Okay. Love the way it's overall how hot this sector has been. So this gives me more confidence and wanting to, join a party within this sector. This is something that, when I first started trading, I was listening to Gino Poor a lot. One of the things he always said was, where are the hottest sectors in the market to look at? So when we're giving you a whole bunch of options to look at, that's a great way to kind of narrow down your options. And so industrials is one of them for me right now. And so when I look at 3M, this is exactly the type of setup I'm looking for. And so I think you can look at this two ways. So if you go down to the trade tab, you can even go, and I really love the liquidity within this stock as well. Let's say if you go 30 days out, look at the weeklies. If you go 185, 180, I mean, you're getting a 71-cent credit, and look how far that brings you under. Now, if you want, if you go 185, 180, bull put.
Okay.
Sorry. 185, 180. And I like the amount of cushion it gives you when you look at the chart and you see where the stock is right now. That's cushion I really feel comfortable with. So that's one way, because I know we've been going at least very aggressive as of late. This is another option that you can look at if you want to be on a more conservative side. So a bull put spread, considering the credit that you're getting and the cushion in return, this is something that I like a lot.
Greg, what are your thoughts? I'm just doing a few analyze of my own on it.
Yeah, no, it's so I like the setup, the ascending triangle into a resistance level there. Hot sector, no doubt about it. The IV ranks a little bit low. We are coming into earnings, so what's typically going to happen with that is your implied volatility will rise a little bit, which will make this a little bit more difficult. I don't happen to get too worried about that kind of thing, especially when you got the cushion that Marquise is talking about here, because you've got several levels that this would have to break before it's going to start causing you some pain. But if you want to be the most efficient, it's kind of tough sometimes doing credit spreads into rising implied volatility. That can sometimes make for a better debit trade. But I love the setup. I love the way it's put together here. You've got a lot of support in here. You've got moving averages and support levels here. The only issue I have here is the 27th. They've got earnings. So if we were going out to the 7th of May, this thing's going to run through earnings, and that for some folks could be a bit scary. So that's the only thing. What I would actually be looking for myself is to see if there was any money in something before the end, before it hit earnings. And unfortunately, there's a little bit there, but not what we'd be looking for, unfortunately. So the only caveat I would have with it would be the earnings issue. So what you'd have to do is start looking back and say, okay, what does this thing do on earnings? Does it gap a lot? Does it, the last two earnings has kind of moved a fair bit after earnings. So, you might just want to be careful of that. But I love the trade setup. I love the way it looks. I really can't fault that. So.
No, and I like the room it has to run too. Like if you go to like a year chart, like a 5-year, 6-year chart, I mean, you're not at all-time highs, and you don't have any real resistance areas to deal with. You got, you've cleared what might have been some old support resistance, some noise on the chart, but you got some clear selling to about 220, right? You got some clear selling till 220. So I like that pocket of clear air between there.
Yeah. And I think with that pocket of clear air there, I think doing a debit spread, going the other side of this, like, again, I don't have a problem with the credit spread idea because I'm a big cash flow guy. But even if you wanted to play this more directionally, with that weekly chart, if you can get that run from where you are now up to that 220, a debit spread will look very attractive. Plus, you're going into earnings, so you get that implied volatility boost. I think that's not a bad option either. So.
Indeed. All right, I want my Halloween. I want something I can tie into Halloween.
Okay. Something a little different, something simple, but what's a foot long and slippery?
What's a foot long and slippery?
A slipper. Simple stuff here, man.
I don't know how to tie that into Halloween, but we'll run with it. Greg, round 4.
Halloween, man.
All righty. After that, that's a hard act to follow. All right, let's. I'm gonna save my best for last. I don't know if it's the best, but let's go this way. So along the lines of Comcast there, Fox A here, Fox Corporation, 20th Century Fox. So a few things that I like about this. It had its pop. It's come back down. It's found support there at the 50. Tried to fail at the 50 several times. Couldn't do it. Now put in a doji today. Would have preferred to see that as green, but it still doesn't. It still doesn't change the way I'm looking at this trade anyway. $37 stock, so it's priced right for everybody. Not an issue there. You don't have earnings until May 5th, so you got lots of time here. I love this rounding bottom. Like I said, a rounding bottom into a technical support level at 50 here. What I'm looking for is once it gets above this 10 MA here, 10 and 20 MA, so get in around 38.50. Just a simple stock play, 38.50 all the way up to 45. You've got an ATR here of $1.69, so you're well more than 2 to 1 there, no problem at all. There's really no resistance once you get past these 2 MAs here. You got no resistance here whatsoever to get back to that 44.80 or the 45 level there. So simple stock trade. You've got time. It's make it a comeback with this whole sector. All of these types of companies like Comcast. Disc, all those other types of companies in this space, they all just kind of got beat up recently. If we look at Disc A, that, they went parabolic and then got crushed, right? And there's a couple other examples in this space that look exactly like this. So, they've all kind of taken it on the chin, but then you look at Fox A or you look at Comcast, right? And they didn't, they took their beating, but they still seem to be a little bit more stable than everything else. The other thing I like about this is really the 50 MA hasn't been breached on this since December of last year. And it came down and they tried awfully hard to close it below that 50 and they just couldn't get her done. Now we've got that confirmation working to the upside. We want a little bit more confirmation. You can see where I drew this line. I drew this line there for a reason. I want to get in above that. Be patient with this one, even if it went sideways for 2 or 3 days a week, I don't care. That just actually makes the trade even better because then that 50, the 10 and the 20 would come together. When you have those moving averages coiling together like that, it's building up energy for a move. And that move that I would be looking for is to the upside.
Yeah, pretty classic. And the storyline of this I like. Marquise, any thoughts?
I would agree with everything that he said. Clearly, this is a deep pullback, right? And for some people, that may give some people cause to pause. But look at the weekly chart on that.
Yeah, I just pulled it up. Yeah.
Yeah, I like the way it's sitting. For me, I have it sitting right on that 200-day moving average. So this is confirming a lot of what Greg is seeing. And when I see this and with his analysis and me looking at this from a weekly chart, I feel more confident. Looking at this for myself personally. So this is a good setup to look at because like this, and I think this is a very a really skilled advanced level of looking at this because for someone who maybe just be starting out, they're probably immediately looking at this as a potential bearish retracement, right? And rightfully so when you're just looking at the technicals, but when you see the way breaks that down and then when you bring things bigger picture and you see that weekly chart, that can start giving the argument for the bulls in this situation. So I like the setup.
Now, are you going to like Greg's joke?
We'll see, man. Listen, I'm a bar guy myself too, so I'm looking forward to those.
I'm all out of bar jokes. You guys got the only 2 I got. So, All right. What's green, fuzzy, and if it fell out of a tree, it would kill you?
It's green, fuzzy, and if it fell out of a tree, it would kill you.
It's a green, fuzzy.
I don't know.
A pool table.
That's terrible.
I wasn't even thinking that route. I wasn't even.
All right. Listen, I like your trade setups a lot better than your jokes tonight, Greg, but that's what you get judged on.
That's right.
Final round. Whatever you got left. Best pick. Let's go. Marquise, you're up.
Right. I actually went back to healthcare, and I like Johnson & Johnson. Okay. Now, the thing is, I will say you do have earnings coming up on the 21st, but I do believe, because like the way it's ran, okay, we had a nice run up about 2 weeks ago, and then we pretty much have been consolidating in a sense, hoping right above short-term moving averages and posting right above that 9 EMA. So I have my trigger if I want to get into this at 164.50, and because of the way we have earnings coming up, and a lot of what we've been talking about, how with debit spreads, and volatility rising, that's the perfect combination you want to have when you're looking at a setup like this. It is not the cleanest setup in the world, but I do like the potential upside with the proper trigger. So when I was looking at this from a bull call perspective, you go down to the trade tab, and let's say you go down to June, 72 days out, you can either go, if you want to go to 175, 165, 170, 165. Those are the two options I would be looking at to want to get aggressive, looking at Johnson & Johnson. And so for me, just because I don't want to be too much in one particular sector. And then overall, I just like the way Johnson & Johnson performed as of recently, and I like the setup to the upside.
What do you think about fixed risk going into earnings on this?
For me, I'm going to be tighter because it's not my favorite. Where's the trade tab? Okay, go ahead, Greg. So for me, I don't want anything coming out a little bit closer, lower for me, Greg, with the trade tab here. So for me, my risk. No, you're fine with the risk graph. I'm sorry, you had it right. So for me, I'm going to be a little bit tighter with mine because overall, because it's not the cleanest setup in the world, I'm probably going to have my risk right above 162.70, 162.65 if I want to get out of this position.
So you'd be putting a stop loss in, you're saying?
Yeah, that's where I would have my stop loss at.
Okay. So I think what Mark was asking, and I like the question that he asked was, how do you feel? So you've got a fixed risk trade here, and you are going through earnings. Is that a problem? And so as far as I'm concerned, you've got $184 fixed risk here. Mm-hmm. And for me, that doesn't come anywhere near my pain threshold. So this is the one time, or one of the few times, that I would have no problem sitting through earnings, because if it tanked and I lost $184, so be it. I still have the potential to make 316. So it's not quite 2-to-1, but it's darn close. And so I think that's kind of what Mark was asking. And that's actually what I like about this, is you can take that risk, and as long as you're okay with spending the $1.84, if it all went away, which again, you have so much time to make this work out to your favor, mm-hmm. that it's unlikely, that even if it tanked, that it would, stay down until June. Now, it could have happened, sure, but just looking at the trend, I would expect that it probably would make some kind of recovery, even post earnings. So, I said,
this trade I sneakily like better than I thought I would, because I got a lot of time. Blue chips are being rewarded in the stock market right now. Mm-hmm. This is a blue chip market, and I don't think that's changing in the coming months. I think a lot of people trading all those hot, sexy SPACs and this and that, they've been having a hard time, and I think they're going to continue to lag.
All those guys named Mark.
Yeah, well, yeah, basically me, because that's but being that what trades I've been looking at, because I take what the market gives me, and the market is giving me blue chips.
Yeah.
A lot of ways I can win this trade. I like the risk reward. I like the time I have to make it work. I like the fixed risk. And if you don't, if you're new to trading, you know what fixed risk is. That means that's the maximum you can lose. I can't lose $1 more than that fixed risk. We go back to the chart real quick.
Sure.
No, I like how it bounced off. You had this multi-month breakout that played out really well. Cody had that on a Trade Masters. Really nice trade to the upside. Came back down, tested that old resistance, bounced off, new support, gliding above the moving averages. I like this trade a little more than I thought I would. It smells good. Does your joke smell good, Marquise?
Simple one. Why was 6 afraid of 7?
Because
7, 8, 9.
7. There was an 8 in there. I knew.
It's 7, 8.
Because there was an 8. There's just an 8 there. All right,
Nice.
Greg finishes off tonight.
All right. I'm going the other side of the fence here, kids. We're going with a bear play here.
Like it.
Our friends Baidu. So obviously the market's pretty bullish right now, but this here particular stock has not been participating at all. We're making a series of lower highs and lower lows. We've gotten this classic bear retracement. We're just starting to get our confirmation now. So it came up to that 10 MA there, failed. We got a red candle today. You'll notice that I have an alert set here. I would not get into this until it broke this price level. That's my trigger. 220.50 is where I want to get into this. Now, a couple of different things here. I could play this a number of ways. I could play this on a debit spread. I could play this on a credit spread. The way to figure out what's best to do in that place is to look at your IV. So if you look at my IV rank here or my implied volatility, it's high. It's in this yellow zone, right? So what that means essentially is I could do a credit spread and get a pretty decent premium out of this thing. Okay. Now I could do a debit spread, and it's going to cost me a little bit more than some of the other ones we looked at with the really low implied volatility. Okay. Earnings is not a concern. Earnings isn't until the 17th of May there. So that's not even really a concern for me whatsoever. So what I saw in here was I was looking right at the 30-day mark, right? 30 days out. I'm looking for a bear call spread. Okay. And I want to, for what I do here is I want to find a level that I'm comfortable with. Okay. So if I go out to the 260 out here, okay, I've got to have some comfort here. And I do have a fair bit of comfort. I've got 2 moving averages. I've got an old resistance zone that's also happens to be right at that 10 MA there. So I've got some comfort here. If I look at this on a delta standpoint, I want to go all the way out to the 260. I want to sell the 260, and I want to buy the 270 for protection behind it. Okay, that's giving me a $1.13 credit. I need at least 10 cents, 10% of the spread if I'm going to do one of these trades. And here I'm getting more than that. So the other part of that I really like, weekly options for this trades. This got 7 million shares traded. It's got lots of volume and open interest here. Even out in here, you could still get filled on these kinds of trades just because of the number of shares traded. And from the other standpoint of that, you're going out to a 17 delta. So you're less than a 20 delta for this particular trade. So just an easy credit spread, 30 days out. Your trade is going to be over on May 7th, and your earnings is not until May 17th. Okay, so this trade will be wrapped up long before you get to earnings. So even if you get some more implied volatility run up, which is possible, the point being is the trade will be settled long before earnings comes. So it's less of an issue than if that were 2 days after or very close to it. That becomes more of a concern. But in this case, this is a classic bear retracement to me. And it's doing one other thing that I really like that I always look for. It appears to be coiling over. Okay, when you get rounding tops and rounding bottoms, typically that's a trend change. So the short-term trend has been up. It's starting to coil over. And when you see those rounding tops, it doesn't work all the time, but typically when you see rounding tops and bottoms, they usually go in the opposite direction. So simple credit spread here, a little bit of bear exposure, just in case the markets they're a little tiny bit overextended right now. We've been getting some sideways action, which has been good for them, which means there's a possibility of another leg up. But if it got a little bit funky and a little bit oversold or something, that might even help this trade out as well.
Nice having a bear pick. Nice having a bear pick. Now, it'd be nice to have one drop dead hilarious joke.
All right.
Oh,
Okay.
Marquise, what do you think about it before we close up shop?
No, I mean, in a situation where people are probably not as confident going bearish, it is important to have a little bit of bearish exposure in your portfolio. And I think this is probably one of the cleaner setups to find for this particular purpose. So me personally, I love the setup. I love the strategy, and especially knowing how much time you have left before earnings comes around. All done.
All right, Mark, I'm going to defer to the judge here. Do you want a Star Wars joke or a beer joke?
I want a Star Wars joke.
All right.
Because on all those Halloween jokes, I can dress up as a stormtrooper. You know.
There you go. All right. Why did the Star Wars movies come out in the order 4, 5, 6, 1, 2, 3?
Why?
In charge of the sequence, Yoda was.
Okay, the nerd in me really appreciates that one.
That was good, man. I'm a Star
really
Wars fan too. I like that.
Really appreciate that one. Marquise, once again, another fine job. I love that Apple setup so much on the strength of the Apple setup alone. The Apple setup for me is just so amazing. It was a tough climb to climb after that. I like it. It's blue chip. It fits the market theme right now. And man,
Yeah,
it just feels like it's going to run, right?
Yeah, I'm looking forward to it for the rest of the week.
And you're already in it.
I'm already in it, man.
You're already in it. I like I love XLF. XLF, I love that. I like the media pullbacks quite a bit too. There's a lot of cheap volatility down. This is a fixed risk, bull call spread, cheap options.
Yeah.
You know, we need to take advantage of that as traders. And if you have any questions about any of these things, these concepts or anything else, Greg, you're hosting the Traders Lounge
yes,
tonight
30 minutes.
in 30 minutes for pro members. Traders Lounge is a product of Tackle Trading where you can come and ask any question you want. You want to look at a chart, you want to break down something, you have a beginning question, you have an advanced question, whatever it may be. Come and ask. Greg, as the winner, what are your final thoughts tonight?
I thought the picks were fantastic. I've got actually a couple that I'm going to be looking at from Marquise there. He brought his A game. The best part of this whole thing about winning it a second weekend in a row is I had a bet with Mr. Tim today that if I won, he had to buy me a beer because he was rooting against me. So, Mr. Tim Justice, you're on notice, bud. I'm looking for that beer. So.
And Greg and I had a side bet that I get half the beer. So
There you go.
anyways, everyone have a wonderful night. Thanks for showing up or watching this on replay. Come back next Wednesday. I love this show. I love the picks. I love the scouting reports, tackle trading offers on the weekend. Thank you, gentlemen, so much. Appreciate it.
Good job, Greg.
Good night, everyone.
Thank you, Marquise. Thanks, Mark. See you, everybody.
Yeah.